Hey, hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets. Next week, the weekly stock market analysis show, where we look at what happened in the market during the last day and how we can plan for a better trade for the coming week. And this is analysis for the week that's starting from November 28th, Monday, tomorrow, 2022. So let's get on the charts. Then the weekly charts of Nifty and Banknifty is what you see here on the left side. It's Nifty. And you could see that it's a beautiful wide range bullish candle without any doubt, inches away from the all-time high of near 18,600. And Banknifty right side charts are also showing wide range bullish candle, which has already hit multiple times new all-time highs, and it's very close to the all-time high that was made last week. Right, so clear bullishness is evident on weekly charts and daily charts. If you look, this is the Friday's close. It's hammer on the top of a rally, could indicate some pullback, and this is daily chart, so some pullback also is okay, but hammer also has a wick. A hammer gets confirmation of a reversal only if it moves below the candle's low, right? Otherwise it just indicates that the wick size is having bullishness, more people to support down there. And alternatively, on the Banknifty daily charts, and Friday close is bearish. It's a bull trap, trapping the bulls who had gone long, right? It could be profit booking, and bull traps can follow by some small mild pullback, right? On the short term daily charts we're talking about, right? But otherwise, a week to week basis, it's a big breakout that has happened, and it is a reconfirmation of a breakout that had already been confirmed 2 weeks back on both indices. And look at the daily Bollinger Bands, and it's showing expansion on the upside on both. Small contraction had come in on the Nifty, so an upside expansion would mean that the price is expected to move up, and it could walk on the bands. And the walking of the bands of the Bollinger Bands is already happening on the daily charts of the Banknifty, so the bullishness out there also, as indicated by the Volatility Indicator Bollinger Bands. Nifty, Banknifty, another view, another perspective. It shows we had been talking about this resistance as a breakout zone on both indices, which is a trendline resistance or rounding bottom. And it is already confirmed that the breakout has happened. This is a reconfirmation on both indices. The 3 weeks continuous breaking out, 3 weeks continuous breaking out, right? So that's another look at the charts. Looking at the support and resistance levels, the first resistance would be clearing the 18,534.90.35. So the all-time, that's where the previous high was made, and after that you have the all-time high very close by 18,605, right? And above that you have the all-time high. It couldn't happen, but yeah, the Fibonacci 78% is coming at 19,000. So till that place, anything could happen. That means breakout could go crazily high. But as the candles form on a daily basis, you will get to know the several resistance levels. That's what the upside resistances on the daily charts are indicating. And downside, you have 18,500 above close is beautiful and it shows the strength. But downside, you would have the major support that comes in at 18,262, and after that you have a gap support that comes in at 18,100, and then it goes to 17,966 levels. That's the previous single support. So that's support resistance on the Nifty. And the Banknifty, if you go, the all-time high is at 43,313.9, so that will be the first thing to be taken out. First resistance could be that, and after that you have the rounding number 43,000, and then 44, and the Fibonacci extension indicates up to 45. It could break out if at all that happens, right? Remember, this is a bull trap, so some reversal can come in. So support Fibonacci 38 is at 42,622. It's also a previous breakout zone, resistance zone, so that could act as a support, and it could pull back to this Fibonacci 38, Fibonacci extension 38 levels, and then bounce it from here. So 42,600 levels is crucial. After that, the support you have is also a confluence with the trend line, and that's at 42,200 levels, and then you have 41,840, and then 41,643. That's a gap support. That's resistance supports on the Banknifty. Make a note of these levels, and then correlate that with the levels that the open interest is giving us, and that's how you take the long trades or short trades accordingly. That's very identify the levels of support and resistances. Moving on, the momentum and the trend indicators are clearly bullish, no doubt about that. Right, left side, what you see is the Nifty weekly charts, and down you have left you have the Bank Nifty weekly charts. So weekly or medium term momentum is rising, and it is bullish above RSI 60. Right side, you have the daily charts, or the short term momentum indicator is what you see on the Nifty on the upside, Bank to the downside. We have a momentum that's in bullish zones for sure, and it's rising on the Nifty, and small pullback has happened momentum on the Bank Nifty, but it's clear bullishness. But on the Nifty daily charts, you can see that there is a bearish divergence that could potentially play out. Right, it's not confirmed, but there is something that you need to be cautious about, right? Which is very normal when you have a rally or breakouts, right? So overall bullishness clearly bullish. ADX is the trend indicator. The ADX trend indicator is showing that it's in the bullish zones and rising up with strength. It's in the bullish zones, rising up in strength in both indices and on both the time frame, short term and the long and the medium term, right? So everything with respect to the trend indicator and the momentum indicator is bullish here. Let's move ahead and see the volatility indicator, VIX India VIX, the sentiment indicator, whatever we call it. It is cooled off for the 7% last week, and now it is 13.33, right? So it's heading towards the all-time low levels of 10 and 11 and all these levels. So the premiums are less, the volatility is could find support at any of these levels close by and then bounce up from here. So whenever the volatility is falling, what needs to be concerned is, right, when you have non-directional trades, and if there is a sudden reversal that comes in, mean reverting happens, then we would have huge losses. So that's something to be cautious about. But otherwise, volatility is dropping, makes the risk less, right? The choppiness less, and it's easier, much more easier to trade, although the profits will be less. So that is something that you keep an eye of. Or the markets moves up and the volatility cools off is a good thing. It's a good indication of more bullishness in the coming future. Right. So moving on, open interest data. The futures open interest data is showing short covering. There is bullish and Nifty and Bank Nifty both. So bullishness is clearly evident on the short covering. Short covering can be very powerful and it can break out, and really markets could move really up. That's what it indicates as of now. But that's futures data. But December 1st monthly. It's a mistake here. December 1st is weekly expiry. So weekly expiry is shown. Options in open interest data is showing that the put call ratio is bullish, definitely above 1 in the Nifty, but in the Bank Nifty it is not that bullish, but very close to bullish. 0.81 is the put call ratio, PCR. The levels of the open interest of the options Nifty and the Bank Nifty, if you look at 18,300 and 19,000, whatever in range is where highest support and resistance is seen. So the option riders are seeing that the market would break out up to 19,000, and the option for the next expiry of December 1st. But there are 4 more days, so these positions may change. The option riders may change their positions and strike prices, and 18,300 is where the highest put rating is seen and support is seen there. And after that, you have 18,500 strangles, where the second highest of puts and calls are written, and PCR and the short covering of the open interest futures we already seen. And if you look at the levels, 43,000 is where the maximum call rate is a put, and that is the same place where the maximum put rating is also happening. Support and resistance both are seen at the same level. It's very close tight range as compared to the Nifty. So Nifty, option riders are seeing a very wide range of volatility to happen, but Bank Nifty, the option riders as of now, as of Friday, is confident that it's going to be hovering around the 43 and 42,000 levels. But second level of highest put and call rating is seen at 43,500 and 45,000. That's also a wide range. So, right. So option levels clearly indicating bullishness, and the PCR is also close to bullish on the Bank Nifty, and short covering rallies for the futures open interest build-up has happened on the Friday. Moving ahead, let's analyze and see how did the sectors perform and how sectors are placed as of now. Right, IT sector has moved up 2.28%. Auto sector has moved 1.4%. Pharma has moved up nearly 1%, 0.85. FMCG also nearly 1%, 0.83. 0.86. Reality also has reality has gone down. Right, so reality and the metal are the two major sectors that has fallen down. Rest IT, auto, pharma, FMCG all moved up. So IT It is bullish on the short term, but weekly charts are still to show the bullishness, are ready to climb in the bullish zone. So we'll have to wait. We have to take confident long positions on the medium term. Metals has closed flat. It was the only sector that was showing bullishness earlier, and now it was a closed flat. Yesterday slightly down, but bullishness is there in the weekly and the daily charts both. Auto sector is forming a POC candle on the weekly basis, and that's bullish. Pharma sector, but the auto sector, the problem is that it is sideways on both the indices. The momentum is still sideways. We'll have to wait. Pharma, the momentum is bullish, but the weekly momentum is still sideways. We'll have to wait there also. So momentum for the FMCG is bullish on the weekly, but at the daily time frame is yet to catch up. Right. So there is some hesitance, and so there is some big reversal or up move that has happened last week for sure across the sector, because the previous week across the sector fall happened, but record has definitely happened, and more sectors are showing strength in the medium term, while short term is still catching up, right? So right now, metal sector is the only sector that seems to be completely bullish on a medium term basis, but other sectors are, as you can see, that they're really have to keep a close watch on this. Let's analyze the charts and see what we are talking about, right? The IT sector, you can see that it has taken out a major resistance, and big rally happened nearly 3% up must happen definitely, but it is yet to climb in the bullish zones yet. Metal is bullish, but it is having resistance on the upside. Auto, you can see that it's yet to climb into the bullish zones, but it had done a breakout on a medium term charts, and it's consolidating. And if you look at the pharma, it has got a major resistance upside. It had hit that and then fallen down back to the channel top from where it had broken out, but again coming back. FMCG also momentum is bullish on the medium term, but not on the short term yet. So it is consolidating basically on the short term, and coming up. It had done a momentum breakout earlier on the medium term charts. Reality is again consolidating. It had done a breakout and then pull back or a cup and handle formation, and then consolidating but momentum. So it's sideways action everywhere that you see, except in the metal for time being. But metal is other sectors are catching up. That's what we can make out. Now looking at HDFC, so we are looking at the index heavyweights and how they performed and what is the status. So who is strong, who is doing bad, good, and all that. So HDFC Bank is at a resistance. Yes. So index heavyweights HDFC is clearly seen as an at resistance, but you can also see that it is broken out and the momentum is clearly bullish on the medium term, short term. So bullishness is there, but keep in mind of this resistance. It has to be clear before you can confidently enter in that. HDFC Bank is what we're talking about now. HDFC is also in a similar situation. It was taken out of resistance and is in the bullish zones, and they have immediately resistance above. Lens is on the channel top. It is moving up consistently since last 6 weeks from the neckline, but momentum is set to climb into the bullish zones. Infosys is showing that it is at a resistance. We have a very big gap resistance which needs to be taken out, but it had made big move last week. Same in the case of TCS also. It is at a momentum resistance also, very closely below the RSI 60, and is trying to take out this momentum after breaking out from the channel top, and it is in much better position than the Infi, considering the fact that the Infi has got a major gap resistance on the upside. ICICI Bank is clearly showing bullishness. It is having positive reverse divergence bullishness, and it seems to be rising about to meet that targets of that, and then new all-time highs were going to hit, and then we have to keep a close watch if it is able to break out from here. So market is breaking out. Definitely this will be the first stock which will be making new all-time highs. Kotak Bank has been consolidating for long, and that's the same thing that it has done. Now it is facing resistance of this zone. Now they may be downward journey, or maximum it may move and hit the resistance on the upside and then start. So it has been. So it just had to break out clearly, consistently. That has not happened since multiple years. But the rally is there. It's neither ready to move up nor ready to move down. But last week was kind of a small resistance pullback is what you see on this index. So ICICI Bank clearly showing bullishness. IT stocks are recovering but at resistance. and other major heavyweights, HDFC and Reliance, is at resistance from the momentum perspective as well as the price action point of view. You have to keep a close watch on all of this. So that's about heavyweights, institutional participation. If you see, moving ahead, it's the institutional participation that we'll be looking at, right? Look at what happened last week. Affairs were net sellers. 1,480 crores of selling, but look at DIs. They have been buying to compensate more than that, right? More than what needs to be compensated, like 1,780 crores of buying in the cash market is happened by the DIs. So net loss on the derivatives side for the 5 days are also moved up slightly, right? So our institutional participation is good, but affairs and small sell-off or small profit booking for the Thanksgiving is what we will assume. As long as big selling is not coming in the Fyers, we should be okay. Global markets, if you look at, that's a dollar index that you're seeing there on the top. It's showing a good pullback of nearly 8% of pullback is what it's saying. It cooled off from the multi-decade 120 nearby levels, and now it is at 106. So good cool off. Last week also was a 1% down move, which is good. USD INR, on the contrary, the currency pair that is actually rose up last week. It spiked up after 3.5% of correction that happened when the dollar cooled off, but it didn't sustain. It spiked up and now it's at 81.68, which is not too far from the weakest rupee levels. Right? So that remains a concern. US dollar currency pair, INR currency pair. Right? So US markets, interesting to see that the Dow Jones has given a confirmation of a breakout from the resistance zone after taking out the channel top. Also a clean close, and momentum has just managed to climb into the bullish zones, but not settled yet. But yeah, that was a good rally that has happened till nearly a big rally. I don't know how much percentage is that, but decent. So let's quickly check what is the percentage of rally happened in the Dow Jones. Right? So it's kind of I'm interested to know that it's 20% up move has happened, right? So that's kind of move that has happened. 20% up move has happened in the US indices, and Dow Jones is what we are talking about. So that's a beautiful rally, and it is clearly showing that the momentum is also good. Fair enough, trend is also good. On the short term and medium term, it is taken out a major resistance also. But look at Nasdaq. That is what the worry is, right? Nasdaq is still at a resistance zone. Major resistance zone is the confluence of a previous resistance as well as a trend line resistance, and it seems to have consolidated last week. Not big moves. So much of the move, it was hardly one. It was flat. It was flat closing the Nasdaq, and S&P 500 is also at resistance to the channel top, and then we have another resistance to take out above. So, but it is in better position as compared to the Nasdaq. But sideways movement is what you see in the weekly or the medium basis on the US indices of S&P and Nasdaq. But Dow Jones clearly has broken out. So you have to keep a close watch on this. If such big moves on either downside or upside happens or not, on the coming days. So volumes in the US markets could be less because of the holiday season that's beginning for the next 1 month. So we'll have to keep close watch. Markets may consolidate, lack of participation or lack of money from the foreign money that comes in could most likely indicate that big moves may not come in that easy. Crude oil. This is another good thing that has happened last week. Further cool off. Further look at the crude that is falling further down to the channel top, and now it is at 77 nearby levels. That's how much, right? That's a 4.4% up down last week, and that's a beautiful downfall which is benefited, which our markets all benefit for sure. The hedging instrument world is still consolidating sideways, but it managed to recover from the fall that had happened earlier, and then trying to take out the resistance that's ahead of it at the 1,700 kind of levels. Right, so gold is picking up, consolidating in sideways at resistance is what we can say. But bearish zones is where the crude oil is. Right? Crude oil is in bearish zones and it's falling further, which is good, and 77 levels is big relief. Right, US market is also doing good as we did, but it is also at a resistance with less volumes during the festival holiday seasons. Dollar has also cooled off, but rupee is set to strengthen. Right? Yeah, so it's not that bad situation from the global markets and the global commodities perspective. Let's move ahead and then concentrate on the stock picks for the next week too. Punjab National Bank, the entire PSU sector was rallying, and you can see that the Punjab and National Bank is broken out from a rectangular box pattern for a long period of time on the weekly charts, and the momentum is high, trend is high, and it could give long swing trades till the next resistance that's seen at the 17 EM allowance, right? So that is one, and second one is better heavy electricals. It is also closed above with a green, very bullish candle with a range shift momentum with weekly medium term from the momentum perspective. So that's a confirmation of a rounding pattern breakout, and any moment the price moves above the last week's candle's high is an entry for you with a stop loss below the candle's low. Right, that can be a positional bet as well. So two stock picks, Punjab National Bank's long and Bharat Heavy Electrical is also long. Moving ahead, the Nifty optional strategy is a bear call spread, calendar spread actually. Right? December 1st weekly calendar 18750 call is sold at 17.85, and December 8th weekly 19,000 call is bought at 15.5, and it is no risk on the downside, right? And there is risk on the upside only if it goes and breaks out below the 18,800, which is less likely to happen. That's why we have an 88% probability of win, and the risk reward may not be that great, but you can exit before the expiry day, 1 or 2 days before that, and book your profits. And then position size is as per your capacity. You can increase your lot size if you have more capital, right? So that's the risk is very less, and probability of success is more as compared to taking back our risk. So capital requirement is also very less. You hardly need 30,000 for one lot, right? So moving ahead, let's wrap up for the week. And we had a previous week which was small pullback was seen on the Nifty, and its breakout confirmation has come in the previous week, and now this week it's a reconfirmation of the bullishness, where the weekly candle is wide range bullish, and the bank index again has made a new all-time high. The Bollinger Bands are still in the upside expansion trend, and momentum indicators are up, and the open interest is also showing bullishness. Institutions are still buying, and therefore VIX has cooled off, and price action is in favor of the bulls. Right. So overall, my view for the next week is moderate bullishness, but the US market is at resistance. There is some volume lack issue that can come in due to the holiday season, and at resistance on all the indices. And Nasdaq is also at resistance and not given a confirmation of a breakout yet on the medium term chart. So big moves there could create problems. Big moves rise the downside or upside could create problems, but otherwise, as of now, looks good. With respect to the several factors like the rupee getting a little bit following the dollar index cool off, and the crude oil which is cooled off, the VIX is cooled off, and so these are the factors that that are turning positive, along with the trend of the momentum indicators clearly showing there is a breakout and a bullishness that can be seen. But one thing that you keep in mind, the global cues are still there. The recession fears, yes, inflation although it has improved, the Fed interest rate hikes, and Russia, Ukraine, China, coronavirus crisis, and all these uncertainties are still there. So we have to be cautious. Right, all we have to do is cut short a portion size if there is a mean reversion of the VIX that happens about 20. Until then, you should be safe. So manage the risk is all that we can do. And 17,850 and 40,500 is the levels that you have to look, and the downside 19,000 and 45,000 are the levels that we can look for the upside for a complete double confirmation of a breakout that can sustain for a longer time. Those are the levels that you have to watch out for the indices, Nifty and Banknifty, right? So we are in a bullish, probable bullish rally is what I would assume, and then I would take my first, my view on that. So this may go wrong. You may have a different view. That's fine, as long as you have benefited from the technical analysis study that we had gone through previous slides, and the views are up to you to take. Right. So the views are based on a study that we had done on multiple parameters, and during the several slides that we went through. So it could differ to individual prices, and even if the view is the same, you still may not. The profit that's being made or the profit or loss that is being made also may differ, due to several factors like the portion sizing, the risk management skills, technical analysis skills, the execution skills, and overall the psychology that each person has put. So having a view alone will not help completely. Trading is investing is all about multiple factors. that I believe you are already aware of. So that's my view. So if this has helped in some way in your trading and investing, then please don't forget to subscribe and share it to maximum and help us in this regard, because we have very few subscriptions in spite of providing analysis every week and every day. Right? So number of views are also less. Please help in this regard. Share it to maximum. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.